So it's another day that we are looking at our continuous revision of the business data analysis that was done in August 2023, and we are looking at the final question. This was question number 24. It's a question that was covering on auditing. It's almost a similar repetition on the question that was tested in April, in the April setting, and we shall go through this question. We first insert here a column, just a small column, and it reads: the audit client Hazina Limited is yet to finalize the financial statement for the year ended 30th June 2023. The company recruited a new accountant who has been in the company for just 2 months. To avoid delaying the audit, the accountant has provided the following list of balances with additional information. So being given these balances here, all these balances, additional information. The suspect's account relates to an issue of ordinary share capital at par. Land is to be revalued upward by 4 million. Inventory on 30th June 2023 amounted to 43,150. Additional credit loss of 1 million is reported, while expected credit loss is estimated at 2.5. Salaries and wages excludes an amount of 520 due to casual employee hired in June 2023. In addition, the audit fee are estimated at 1.2. Loan stock interest is paid for half year. General expense include prepaid amount of 350,000. Depreciation is charged as follows: motor vehicle 30% per annum, reducing balance, and office furniture 10% straight line. Building is 2% straight line. So estimated corporate tax is 6.5. So you are required prepare an audit working schedule having 4 sections for draft trial balance, adjustments, profit or loss item, and statement of financial position. Each section should have debit and credit column, therefore 8 columns. So you need to have 8 columns. Therefore I will insert here, I will insert sheet row, I will insert like two rows there, so that I'll just rely on this and others that we shall add down here. I believe we shall add others. So the first thing I will just start here with my debit, DR and CR. Remember, these are shillings in thousand, shillings in thousand. So this first part is for the draft trial balance, draft trial balance, trial balance, draft trial balance. I'll merge and bold that, merge and bold that. We shall have the second, DR and CR. Remember, just need 8 columns. These are for our adjustments, and I'll center that and bold, Control B. The other one we shall have DR and CR, DR and CR. This is statement of profit or loss item, profit or loss item. Profit or loss item. This is profit or loss items, profit or loss items. Just merge that and I merge this, profit or loss item. And the last one is statement of financial position items. So here we shall have debit, we shall have credit, financial position item, statement of a financial position, position items. Can merge this and bold that, and just bold this. So here, pick this, pick this. We need 4 of them. Yeah, that way. Just need to copy and to paste there. Yeah, that way. So those are our items. We need 8 columns, 1 2 3 4, and each one has got 2 columns. So those are 8 columns of the items that we require to show. Items that we require to show. And in our case, the draft trial balance is just a trial balance the way it's supposed to be. Yeah, so remember, I will rely with these values. I will not copy it again, but you can decide to copy all these values to bring them on this side. Yeah, there will be no harm of you copying, but I can just decide to use the values the way they are. So in this case, our ordinary share, we know, is normally on the credit, in the trial balance. Preference on the credit, revaluation on the credit, retained on the credit, inventory, the opening is normally on the debit, receivable on the debit, cash on the debit, trade payable on the credit, loan stock on the credit, sales on the credit, and purchases on the debit, purchases on the debit, credit loss, these are bad debts on the debit, is an expense, salaries on the debit, insurance on the debit, and the postage on the debit is an expense, lighting and heating on the debit is an expense, loan stock interest on the debit, directors emolument on the debit, dividend paid ordinary is on the debit, is an expense, preference is on the debit, general expense is on the debit, and motor vehicle at cost is on the debit, accumulated depreciation on motor vehicle is on the credit, office furniture and equipment is on the debit, accumulated depreciation on all his office furniture is on the credit, and land is on the debit, and the building is on the debit, accumulated depreciation on building on the credit, and the suspense account, we are told it related to issue of ordinary shares, so it will be on the credit side. It will be on the credit side, the suspense account. And here I will include, let me include some like 5 rows for any additional adjustment that we shall make, yeah. So those are 1 2 3 4 5. Let me include one more, so that if need be we shall include others. So I'll use the last one here to get the total, so that I will leave this space for any additional that we shall add in the additional information, because I believe there are some information that we shall need to include. So I'll take alt equals, yeah, I'll expand this all the way from that particular point, and I enter, and I will drag this. You find that it has already balanced. Yeah, it has balanced at that particular point, I'll use top and bottom border thick, and I will bold that. That is for the draft trial balance. We go to the second part for the adjustment, and for the adjustment I will do some workings first here, because these are the items that we need to do the adjustment on. So motor vehicle depreciation, motor vehicle depreciation. Motor vehicle is 30% on reducing balance. I'll calculate it here. For the motor vehicle, we know the cost of motor vehicle was this. I will open the bracket, open my bracket. So motor vehicle at cost of 17, and I minus accumulated depreciation on motor vehicle of 63, and I multiply by the rate, and our rate have been given here, which is 30%, 0.3 being 30%. So that will be our depreciation. Office furniture is on straight line. For office furniture is on straight line, 10%. Yeah, so it will be easier if I put this value as a percentage. Even this one, I put it as a percentage. It will make my work easier. So that here, office furniture, the cost of office furniture was this, and I multiply by the rate of 10%. I'll get that. For the building, 2%. The cost of building is here, 45, and I multiply by 2%, and I enter. So that will be our depreciation. So I need to do an adjustment first, starting with this. The suspense account relates to an issue of ordinary share capital at par. So for the adjustment, what we shall do, so at adjustment, remember, we just need to know or to observe the double entry system of accounting, whereby we shall debit here, we debit the suspense account, shall debit suspense account 5,000, and we credit ordinary shares because it was issued at par. Our ordinary shares, we credit this value. We shall credit the same value, 5,000, that way, at par. Then the second one, land is to be revalued upward by 4 million. Remember, we're dealing with shillings in thousand. So when you look at land, we had revaluation reserve here. So revaluation reserve, we shall credit here 4,000. I can just put here 4,000 for ease of reference. So here, revaluation reserve, it will increase by 4,000. This one. And land, it is land, yeah, it is land that was revalued. The value of land here, I will come and debit land by the same value of 4,000. Yeah, the adjustment will feature in the land. Land will be revalued upward. Then inventory doesn't appear in the trial balance, it will appear in the income statement. Additional credit loss of 1,000 is to be reported. So 1,000, here we have 1,000, and we have 25. You just put them separately for the expected credit loss. So for this one, additional credit loss, this is an expense. It will affect our budgets, credit loss. Yeah, here we shall debit credit loss because it will be an expense of 1,000, and it will affect what? The receivable. Our receivable, accounts receivable, trade payable, somewhere. A trade receivable is here. Yeah, the receivable will be affected. We shall minus, we shall credit that value on the receivable of 1,000. Yeah, because we have written off its bad debts, the credit loss. Then in addition, we are saying additional credit loss of 1,000 is reported, while expected credit loss is estimated to be 25. So let us look at the provision, whether we have that provision for bad debts. So just say the credit loss, dividend general. Yeah, we did not have that. So we did not have that. Yeah, provision for credit loss can include that. Provision for credit loss. Yeah, this allowance for bad debts. So we are creating that, and it's a new one. Additional credit loss of 1,000 is reported, while expected credit loss is estimated at 25. So this is a provision of 25 here. So for the provision of 25, provision of 25, I will include it as an expense because it's a new value that we are creating here. I will debit this value of 25 and I will credit here. It will affect this value here. I will add plus this value of 25. That way we'll add plus 25 as our adjustment for the debtors or the receivable. We are here, salaries and wages excludes an amount of 520 due to casual employees hired in June. So these are accruals. I'll create here accruals. Yeah, for the accruals we have accrued salaries and wages exclude amount of 520 due to casual employees hired in June. So 520, you shall have an accrual of 520. This is a liability. So here 520, and our 520 for the accrual I will credit here because it will be a liability of 520, and it will affect the salaries and wages. Salaries and wages. Yeah, salaries and wages here I will debit this value of salaries and wages with 520, sorry. Yeah, because it will increase that particular value. The other statement that we have is, in addition, the audit fee are estimated at 1.2. Yeah, did we have audit fee? We did not have audit fee. So we shall include audit fee here. Audit fee, and it will go to accrual because it's yet to be paid. So audit fee, and your total is estimated at 1.2. So audit fee, I will debit this for the audit fee of 1.2, and I will credit the accruals. It will affect the accruals. I will add here under the accruals 1.2 for the audit fee. Then the next thing, the loan stock interest. The loan stock interest paid is for half year. When you look at the loan stock, it is 10% loan stock interest here. I will calculate it here. The value is 8, and I will multiply by 10%, 0.1. So the total value is supposed to be 800. So already we have paid out of the 800 for the loan stock. We have paid, I think, 400. I think I saw it somewhere here. The loan stock interest already we have paid 400. So 400 is yet to be paid. So it's an accrual. So we shall debit here loan stock interest. Yeah. So here we have an accrual, unpaid. Unpaid amount is 400. Unpaid amount is 400. So we shall debit loan interest here 400. I'll pick this value, and it will go to my accrual. I'll still add that to my accrual. My accrual of 400, which is unpaid. Then general expense include prepaid amount of 350. So here we have 350, which is a prepayment. We'll include it here. We call it prepayment. Prepayments, remember, assets. So here the prepayment of 350 here. I'll include it here, prepayment of 350. I'll debit that. and I will credit, it was for general expense. Yeah, general expense is somewhere here. Yeah, general expense here, and I will credit this general expense with 350, which is a prepayment, that way. Then what else do you know? Yeah, depreciation charged was as follows. The depreciation for motor vehicle, so shall have depreciation for the year, depreciation for the year, depreciation for the year, which will be a combination. Yeah, depreciation for the year, I will combine it, which will be an expense here. Depreciation for the year will be the three of them, this, and I add this, and I add this. All these will be an expense for that particular year. Then I will credit accumulated depreciation for motor vehicle. I'll start with the building. Building was 900. Building was somewhere here. Accumulated depreciation of building, so I'll credit here with this value of 900. I will credit for office furniture and equipment. Office furniture and equipment, the accumulated depreciation of 32, and the other one is for accumulated depreciation office, accumulated depreciation on motor vehicle. Here I will credit this value, motor vehicle, by 420, that way. And what else? Okay, I will add another two. Yeah, to insert two more or three more. Yeah, that way. And okay, so depreciation for the year, okay, let me just delete this and cut this and paste it here, and I will calculate it here again. The depreciation I said is this. I add this, I add this, the three of them. Is it captured everything really? So no, it has not captured everything. Supposed to be goes to this, and I add this, and I add this value. Yeah, it's 152. That one is okay. Remaining with what? Estimated corporate tax is 65. Still it will be forming part of our accrued tax. Yeah, corporate tax, I will include it here. Corporate tax, or tax for the year, it will be an expense for this particular year, even if it's yet to be paid. 6,500 here, 6,500, and it will form part of our accruals because we did not have the tax. So accruals for tax, accrual for tax. So our accrual here will again add accruals. I will add what? The 6,500 for the accrual, the 6,500, that way. The other thing, I think that's all that we have. Yeah, that's all. When you look at the dividend, I believe we paid everything. Yeah, because when you don't have the percentage for the preference, yeah, that means we paid everything, and that's all that we had there. We have covered everything. The only thing is a closing. We shall use it, the closing inventory. closing inventory, and the profit or loss for the year. So for the loss, and the loss, I will use a bracket. Profit or loss for the year, loss will be in the bracket, the profit will be positive. I think that's all that we have under that category. And when you look at this one, it has captured up to F46 from F10. I think that one is okay to that particular point. And even this one, G46. So we just need to have to drag this, because already the formula is intact. I'll extend this, and this one, that way. You'll find that again automatically it has balanced. So my adjustment has already agreed to balance. Yeah, it has balanced that way. So those are our adjustments, the way they were supposed to be done. Now the profit or loss items that are supposed to appear now in the profit or loss. And in the profit or loss item, the first item shall come and start with what? Opening inventory. Yeah, opening is normally on the debit. Yeah, opening inventory, so we had it here in the trial balance. Then we come to sales, no adjustment for sales. Yeah, sales. Then purchases on the debit, no adjustment. We have the credit loss budgets. So budgets, we shall have this, and we add this value. That's the total budgets that we shall have. So salaries, we shall have this value, and we add the adjustment for salary. So this one was on the debit, we were including it. Then the insurance, this value. Then postage, then light and heat, then loan stock interest. So we shall add both plus the adjustment. So the total amount will be 800. Directors emolument, and dividends paid. Even if you're not, these are items, just remember that. Preference dividend, we are not preparing it as statement, these are just items. General expense, so for the general it was prepaid, so shall take that and we minus this value. That is the item that will go to the general expense. Then what else? Accumulated, all these suspense. Yeah, we shall have the provision for credit loss because it was an increase. Then we shall have the audit fee here. Then we shall have prepayment, corporate tax item, corporate tax, and the depreciation for the year. This will be depreciation for the year. We shall have the corporate tax here, that way. So closing inventory will not appear. Yeah, closing will appear. Our closing inventory was 43,150. So closing now will appear on the credit here. Our closing inventory, because it will reduce. It will appear in the profit or loss item, but on the credit side. So that we have covered the adjustments that was affecting our statement. Yeah, and that's all. So you can get the difference here. Alt equals and I'll drag this. Yeah, up to that point. So I'll have the 63, but this one on the debit, let me do it here, and I'll adjust alt equals I'll start here. They need this total up to, yeah, total up to that point. That way you'll find that the credit is more than this value, and therefore here, so to get the profit, our profit will be equals to this value. This value, and I minus this value, bring it will agree. Yeah, it will not agree to that. Okay, but I have shown you how. So that means that here is supposed to have the same value, 363 250, that way. So that to get our profit for the year, this will be equals to this value minus sum of these from here, minus this up to that point, and I will close my bracket and I enter. So that will be our profit, so that the value are the same, 363 250, 363 250. Then use the top and bottom border, and I bold that way. So that will be our profit for that particular year. And the last item that we are yet to calculate now is the elements or items for the draft financial statement of financial position. So for the financial position, we shall have the ordinary here, this one, and we add the adjustment of 5,000. So we shall have this preference, we shall have a revaluation, and we add with this. Then we shall have the retained profit. So here, retained profit, this was the brought forward, and we add for the year. Remember, for the year we have it here, retained profit for the year is this one, we add that. And then we have inventory receivable, so receivable here will be on the debit, receivable of this, and we minus the adjustment here. And then after receivable, we have the cash of 89. We have the payable, no adjustment on the payable. Then we have the loan stock, no adjustment. Sales, it's not an item here. So we move on up to motor vehicle. Yeah, motor vehicle. And for the motor vehicle, it will appear here. Motor vehicle is an asset, so we shall debit motor vehicle with accumulated on the credit of 63 already, that is adjusted. Then furniture, and with accumulated of furniture of 86. Then we had land was adjusted get a revaluation of 4, building 45 with accumulated of 72. Okay, yeah, so we shall adjust that. So accumulated here will be 72 plus this value 900. Even this accumulated of office furniture, okay, I think this value is wrong. Accumulated of 32 was supposed to be here. Just cut this and paste it here. Okay, yeah, so for the accumulated of furniture here, I will add here this adjustment of 32. Even for this one, I will add the adjustment of 40/20 that way. And suspense already we have captured that, and provision for credit loss we have captured. So we have accrual. Accrual is a liability here, or our accruals will be liability. Yeah, audit fee already we have captured that. A prepayment will be an asset. Our prepayment here will form part of the asset. Depreciation for the year we have captured. Corporate tax we have captured it. Closing inventory, profit or loss already we have captured that. And I think that's all. Yeah, I'll just drag this here to that point, and I will extend this, and I'll extend this, and you'll find that we have a difference of yeah, it's not balancing up. Let me check. Yeah, the inventory, the closing inventory should be the problem, because closing inventory is an asset here. The closing inventory is an asset, and automatically it will balance at 192,520, 192,520, and that is the schedule. Yeah, that is the schedule that was supposed to be prepared. The schedule that was supposed to be prepared in this particular case, on this particular question number 24 for auditing. It was testing on the specialization area of auditing, specialization area for those who are doing auditing. And even if you're not doing auditing, it was just a simple question that was doable, considering that it was tested in the previous sitting. So that's how the 8 columns were supposed to be prepared. You prepare an audit working schedule having 4 sections for draft, trial balance, adjustment, all those. Each section should have a debit. So this is audit working schedule. Yeah, audit working schedule. I will include a row here there, so that I can write my audit working schedule. Audit working schedule. Audit working schedule, and I will put it here, margin center, bold, that can use that audit working schedule. And that's how that particular question was supposed to be done. So continue subscribing. Tell a friend to subscribe to this channel for more informative revision, for more in-depth analysis of questions. Yeah, thank you.